Good evening, everyone. Chair, board, president. It's fantastic and a privilege to join everyone here this evening at the 2025 annual general meeting. I think from the day Linn was founded, our promise was very simple: real people serving primary educators with care and professionalism. We set out to provide financial support that grows with you, support that starts in the staff room and stays with you throughout every stage of life. Like the roots of a strong tree, our credit union was planted in the Teachers Club, cared for by the INTO and the RTI communities, and nurtured by trust. Year after year, those roots have deepened, our trunk has strengthened, and our branches have stretched to serve more members in more ways with more heart. That growth is not just measured in accounts and ratios, but in the very human stories of the members who felt heard, supported, and helped turn their plans into progress. Tonight, I'm going to begin with one of those stories that captures who we are. When a member fell victim to a Revolut scam, her first instinct was to call Linn, not Revolut. In a moment of panic for the member, our team calmly listened, asked the right questions, and helped her piece together what had happened. We reassured her, reminded her it wasn't her fault, and guided her to take the right steps. Days later, she called back to thank us for the care and support, even though the fraud wasn't on her Linn account. For her, we were more than just a credit union. We were a trusted lifeline. We're grateful for feedback like this. It reminds us that every interaction is a chance to change someone's story, and that we must show up every day with empathy, care, and professionalism. We don't get everything right first time. When we fall short, we listen, we learn, and we improve, because your trust is not taken for granted. It's built every single day. The spirit of everything we do is member outcomes that matter. This year, we kept our focus on what it feels like for you in real life. Our service and net promoter score stayed in the high 90s each month. We welcomed 1,541 new members this year, bringing our total to nearly 31,000, and 85% of you use the credit union every 3 months. We're digital where it helps, with 93% of our loan applications starting online, with our team by your side throughout. We made our budget accounts fairer by removing debit interest and aligning everyday budgeting with our member-first values. And a long-standing pain point was fixed, where we are now able to process our payroll without stopping the online banking, and you can access it 24/7. I'm so proud that Linn was also recertified as a great place to work and named among the top 20 small workplaces in Ireland. This isn't just a plaque on the wall. It's living proof of the culture that we've built, a culture of care, trust, excellence, that our members feel every time they apply or drop us a note. This is a brilliant achievement, and I want to highlight the entire Linn team. It's their passion for service, drive for excellence, and everyday efforts that set us apart. Thank you to Celine, Maria, Marion, Martha, Sharuk, along with all of our staff who make such a brilliant team. I'm so proud to work alongside such a talented, committed, and generous group of people. Linn delivered a very strong financial year this year, achieving a 4.5 million surplus on 10.3 million in income, with total assets rising to 306.7 million and a robust reserves ratio of 14.5%. The annual accounts are set out on pages 12 to 38 of the annual report, starting with the director's report and continuing through the financial statements and notes. The income and expenditure account on page 19 shows a breakdown of our income. It reflects steady lending momentum and sound investment returns with a prudent risk appetite. Loan interest remained the principal driver, with investment income contributing meaningfully alongside other income. Our loan interest income increased by 10.3% to 7.3 million last year, while our investment income decreased as market conditions changed and interest rates reduced. This year, our investment income was 2.8 million, down 12% from last year. The expenses are summarised on page 19, and we go into significantly more detail on page 37. Our total expenditure increased last year to 5.8 million, rising from increases in credit costs or loan provisions. Our salaries and related costs were flat and remained at 2.3 million. Other management expenses were also flat in 2005, which I'll analyse in the next slide. Our credit costs increased by 320,000 this year, and this does not signal higher risk. Indeed, instead it reflects the healthy growth of our loan portfolio and our continued commitment to prudent provisioning. The quality of our loan book remains strong, with members making every effort to repay their loans. We maintain a careful approach to provisions and credit costs, all of which is detailed in notes 5, 8, and 19 of the annual reports. Other management expenses, as I said, were the same at 2.96 million, and these are detailed on page 37 of the annual report. 4 expense categories account for almost 2 million in expenditure. Our loan protection and life savings insurance was the highest category of expenditure, growing in line with the increased balance sheet, and our total costs were 611,000 last year. Computer services increased significantly in 2025 as we migrated to cloud infrastructure and continued to invest in strengthening our IT controls, resilience, and cyber risk protections. This is an area that will necessitate further investment in 2026. The central bank levies reduced in 2025 to 459,000, and our marketing spend rose as we focused on more direct and face-to-face engagement with our members right across the country. We visited more schools, we visited more events and more colleges, and this investment helped us to drive that growth we talked about in new members, in loans, and our overall engagement with our membership. Other notable expenditure increases included telephone and postage, which increased to 105,000 due to some additional regulatory communications for SEPA Instant in the year. This year's income and expenditure account shows a very healthy surplus at 4.4 million, which is up slightly from last year. And as I said earlier, it's driven by strong lending growth and careful cost management. Our cost-to-income ratio remains low at 56%, remaining one of the leading percentages in the credit union sector, as we expect our surplus to remain strong, allowing us to keep building reserves and supporting our members with good dividends. Salaries and related costs are our largest expense, but as a percentage of income, they continue to fall, now at 22%, reflecting our commitment to high service levels and efficiency. The healthy surplus allows us to invest, innovate, and return value to our members while remaining resilient. And overall, we expect our cost base to remain stable over the coming years, supporting both resilience and value for our members. Our total assets now exceed 307 million, reflecting really strong member loyalty and active use of our services. Lending remains our core focus, with loan book growing by 10.2% to over 124 million last year. Over 5,000 of our members borrowed more than 55 million. Like the flourishing branches and leaves of a healthy tree, this growth enables us to support our members' needs, acting always in their best interests. I reflected the credit costs earlier and growing in line with the loan book growth, and we maintain provisions at 2% of the net loan book. Our investment portfolio grew slightly and is managed conservatively to prioritise safety and liquidity. And overall, our balance sheet remains robust, supporting both members' needs and long-term stability. A full breakdown of the deposit and investments liquidity is in notes 6 and 7 on pages 28 and 29. Our other assets are comprised of fixed assets, debtors, prepayments, and accrued income, and these are explained further in notes 10 and 11 on page 31. Our loan-to-asset ratio now at 40.6%. This was a key strategic target for Linn and shows we're putting member savings to work through personal loans growing steadily each year. The rate of returns on our loans was consistent at 6.2%, and our borrowers contributed significantly to the credit union's income. Investment returns reduced slightly to 1.7%, in line with general interest rates. In previous years, we highlighted the regulatory and business model constraints that prevented Linn from offering a sustainable mortgage solution. but that's changing. As John referenced earlier, and you may have read in the Irish Times last week, Linn is leading a sector-wide initiative to develop a centralised liquidity mechanism, and combined with the new central bank lending limits, we are moving closer to being able to provide a safe and sustainable mortgage solution. Our goal is to ensure that every member, not just the first applicants, can benefit from this service. We're excited to help shape the important development for our members, from newly qualified teachers right through to those seeking their next home. We were delighted to report a substantial increase in member savings last year, now totaling 254 million. Your savings are not only the foundation of your relationship with the credit union, but they're also the lifeblood that allows us to lend, helping fellow members achieve their goals and strengthening our entire community. We saw an increase in money management accounts. Both budget and current accounts continue to support members' financial well-being. Over 550 of our members use our bill pay budget account, and another 1,200 members hold current accounts. To give life to these figures, since October, we've processed 20,000 SEPA instant transactions, moving over 10 million of our members' money in under 10 seconds. Linn also offers a very unique payroll deduction service, allowing our members to save or repay their loans directly from salary every fortnight. We call this our quiet superpower, making it easy to save, pay bills, or stay on top of loan repayments. As John mentioned, let me reiterate, we're very grateful to the Department of Education and Payroll and Pensions for their ongoing support for this vital service. A full breakdown of member funds is in notes 12, 13 and 14 on pages 31 and 32 of the annual report. The strength of Linn lies in its second key strategic priority for our board and management team. Today, Linn holds 44.6 million in reserves with a capital ratio of 14.5%. Our current position forms the sturdy core of our credit union, supporting growth, weathering challenges, and ensuring we can serve members for future generations to come. We continue to solidify our balance sheet, generating a sustainable surplus that supports savings growth, pays dividends to our members, and further strengthens our capital base. Our growth plan is sustainable, and we have significantly bolstered our reserves in recent years. In fact, our mission is clear: to sustain a well-run business model, prioritizing capital strength, and to protect the credit union for the future. For those interested in the details, the movement in reserves is outlined on page 22, with further information in note 18 on page 33. And the full cash flow and financial statements can be found on page 23, and our accounting policies are set out across pages 24 to 28. I don't propose to go into any more detail, but I'm very happy to answer any questions that people have at the end. I want to acknowledge the tremendous support that we receive from the INTO, from your President, General Secretary, and all of the INTO team, also the RTAI team, and our friends in all the teaching colleges throughout Ireland, and all our members who help spread the word about Linn. A special thank you to our board of directors and every volunteer. Your dedication, guidance, and countless hours, offered freely and with care, are the foundations of our success and ensure we remain relevant, ethical, and focused on serving our community. In conclusion, let me return to our theme: financial support that grows with you. Like a tree with deep roots and strong branches, Linn thrives because of your trust, feedback, and many referrals. When you encourage new teachers, students, family members, and colleagues to join, our tree grows stronger and our branches reach even further. With your support, Linn will remain a trusted partner for educators now and into the future. We know you juggle busy lives, and it means a lot to hear how we've helped, what makes things easier, and how we can keep improving. There's no greater reward than seeing our members succeed and knowing we've played a part in that journey. Our goal is to be your financial ally. We'll keep pairing value with care and service, acting prudently and placing your interests first. We'll stay humble, listening, learning, and improving, because trust is earned every day. As we look ahead, I return to our tree, our roots, the founding purpose, the member ownership, and shared values run deep. Our trunk, the capital strength, and resilient systems stand firm. Our branches, service, support, and community impact reach even further every year to shelter and support our members. We'll continue to be the credit union that grows with you, stable enough to weather any storm, generous enough to bear fruit, and rooted enough to remain yours for your generations to come. Thank you, and I'm happy to propose the accounts and take the questions after the auditor's report.